Hi, this is a PowerPoint video about payroll taxes. Do you think payroll taxes should be higher or lower or stay the same? And why? Well, to form an educated opinion, first you need to do an economic analysis of payroll taxes. We need to look at the costs and benefits, the incentives created, and the unintended consequences of payroll taxes. And there are three main ones: Social Security tax, Medicare tax, and unemployment insurance tax. So, in addition to federal individual income taxes that individuals have to pay, and federal corporate income taxes that corporations have to pay, we also have to pay payroll taxes. They are called that because they're based on the company's payroll. Usually, the employee, that is the worker, pays half of the tax owed to the federal government, and the employer, that is the company, pays half of the tax owed. Self-employed people, like if you're a self-employed plumber, if you have your own accounting business, if you're a dentist and you have your own business, then you have to pay both halves. If you're self-employed, you work for yourself. Does that incentivize people to be self-employed if you have to pay both halves of the tax? Yes or no? Why or why not? There are two main payroll taxes: Social Security and Medicare. On your paycheck, they're sometimes labeled FICA because of a law that set them up, the Federal Insurance Contributions Act. Basically, we make contributions electronically, automatically, we make contributions out of our paycheck. Let's start with Social Security. What is it? It's federal government money for people over 65 to retire. So here you see a nice couple over 65, and she's holding the Social Security check she got from the federal government. Why do we have Social Security? So that old people will retire, so they'll have enough money to retire. And that will open jobs for whom? And if old people have more money, what can they do with it? Social Security is also known as OASD, OASDI, OASD. That stands for Old Age, Survivors, and Disability Insurance Program. In other words, this is federal government money for people over 65, that's old age, for survivors, that is for widows whose spouses died, and people who are disabled. How is it calculated? The employee, that is the worker, pays 6.2% of his or her paycheck up to a maximum amount of about $120,000. So any money you earn up to $120,000 gets hit with that 6.2% tax. Any money that you earn above $120,000 is not hit with the Social Security tax. And here comes the other half. The employer also pays 6.2% of your paycheck, again, up to a maximum amount of about $120,000. Any money that the worker earns above that, the employer does not have to pay Social Security tax for that money. Again, if you're self-employed, if you have your own landscaping business and you're self-employed, those people must pay both halves. In other words, 12.4%. 6.2 plus 6.2 is 12.4% of their paycheck to the government in Social Security tax. So, if a worker earned $100,000 in a year, how much would he or she have to pay in Social Security tax? How much would the employer have to pay in Social Security tax? And if the person, if this $100,000 earner were self-employed, then how much would they have to pay? US President Franklin D. Roosevelt signed Social Security into law in the 1930s during the Great Depression to give old people money so they would retire, and that would open up jobs for millions of unemployed young people. Here you see the federal budget in 2015. Today, it's about a quarter, it's about 25% of our federal budget. It is the largest federal government program. Today, we spend about $1 trillion a year on Social Security. It is enormous. Medicare is another program that is funded with payroll taxes. What is Medicare? It is federal government money to help old people over 65 pay for their health bills and their health care. So here you see a nice old lady getting her health care. Why do we have Medicare? Well, almost all old people get sick, and health care is too expensive for most people to afford on their own, so they get government help. How is the Medicare tax calculated? The employee, that is the worker, pays 1.45% of his or her entire paycheck. There's no cap, there's no limit. All right, you pay 1.45% of all the money you earn. Also, the employer, that is the company that hires you, they pay 1.45% of your entire paycheck. There's no cap, there's no limit. So, for example, if you earn $200,000 a year, all of that gets hit with this 1.45% tax. Self-employed people pay 2.9% of the entire paycheck. So again, self-employed people have to pay both halves. 1.45 is the worker's half, 1.45 is the employer's half. Self-employed people who work for themselves have to pay both halves. So, if a worker earns $100,000 a year, then how much does he or she pay in Medicare tax? How much does the employer pay? And if you're self-employed, then how much do you pay? Here's President Lyndon Baines Johnson signing Medicare into law in 1965. Today, the federal government spends about $700 billion a year on Medicare. It's another huge program. It's about 17%, almost 20%, almost 1/5 of the federal government. It's another enormous program. And you might have seen these things on your paycheck. All right, so here are your wages. Let's say your name is Rita. Here are your wages. All right, and here is your Medicare tax. Here's your Social Security tax. There's your federal income tax and your state income tax. There's one more major payroll tax, and that is unemployment taxes. Employers, that is companies, but not the workers, have to pay unemployment taxes. Why do we have this tax? Unemployment taxes pay for unemployment insurance. In other words, if you're fired, you can get unemployment checks for a few months so you can eat and feed your family and survive until you get a new job. Where does that money come from? It comes from this tax on companies. Companies can't just fire you without any consequences on the company. They have to pay this tax. How is the unemployment tax calculated? Well, the employer pays 6% of the first $7,000 that it pays a worker. 6% on the first $7,000 it pays any worker. So, for a worker earning $100,000 a year, the company must pay how much in unemployment taxes? And let's say the worker earns just $10,000 a year. The company must pay how much in unemployment taxes? So let's consider the costs of all of these payroll taxes together. If a worker earns $100,000 a year, then the employer must pay the following. They have to pay that salary, which costs $100,000, and they have to pay a Social Security tax, 6.25% of $100,000, which costs how much? And the company has to pay the Medicare tax, 1.45% of 100,000, which costs how much? And the company has got to pay an unemployment tax. That's 6% of $7,000, which costs how much? So a $100,000 worker actually costs the company how much in total? So what incentives do payroll taxes create? What do they incentivize employers to do? Do they incentivize employers to pay people officially or in cash under the table and off the books? Do payroll taxes incentivize employers to hire Americans or hire workers in a country that doesn't have those taxes? Do payroll taxes incentivize employers to hire more workers or fewer workers? Do payroll taxes incentivize employers to use human workers or to use machines and technology? And what about for employees, for the workers themselves? If you're going to get hit with these payroll taxes, does that incentivize you to get paid officially or in cash under the table off the books? Do payroll taxes incentivize people to start their own companies and be self employed? Yes or no? Why or why not? So I'd like you to think, please, about the costs and benefits, incentives created, and unintended consequence. And then I think you're going to be ready to make your own opinion. Do you think these taxes should be higher or lower or stay the same, and why? I hope this is clear. If you have any questions, please let me know. Thank you.